What's up guys, welcome back to InvestingPH. So this will be my last portfolio update for 2022, and so far our market is still lagging. We started this year in the 7,000 range, and right now we are stuck below 6,500. But as always, I treated this as an opportunity. In fact, I was actually happy that stocks are still trading at a discount. This for me is the biggest advantage of dividend investing. Not only that it gives consistent cash flow, but when stocks are down, the higher the dividend yield you get. So with the market trading sideways for more than 2 years, this helped me bulk up my portfolio with cheap, great companies that gives me a good amount of dividends, which for this year gave me almost double the amount that I got last year. I earned a total of 81,000 this year, making my total dividends received to 133,000. And for my monthly average income, I'm now earning 6,754 pesos. You know, I am really happy about this. I can already feel my dividends helping me out in my investing journey. Whenever my money is short on following the 8K rule, which is investing a minimum of 8,000 every transaction to minimize brokerage fees, sometimes my dividends give me that added buying power to follow that. It is pretty amazing. I'm earning this amount without doing anything, and this gets reinvested back into my portfolio to earn me more dividends the next year. Now the largest contributor to my dividends this year is LTG, which is my largest holding as well. It has given me 25,500 pesos. The next one is TMCI. With their special dividends, I got 18,360. These two alone surpassed my last year's dividend income. The third largest contributor is Aboitiz Power. Now it has been a long time since I've added shares to this company. Though that's the case, since they are somehow recovering from the pandemic, they've raised again their dividend payout compared to last year. Now my other stocks have less than 5K in contribution. Now I think for next year, DDMPR and MREIT would give me a larger amount since for this year, I've mostly bought my shares after their dividend payout. My goal for 2023 is to earn more than 8,000 pesos a month. Hopefully, I would be able to achieve it since I don't know if DMC would give another special dividend next year. But I think my REIT investments would cover it up if they don't decide to pay another round. Now what I'm trying to do as a long-term dividend investor is to take advantage of what the market is providing us. There are a lot of companies that are on sale right now. If your horizon is 10 years or more, then you will look back at this moment and be happy that you invested during these times. These are the moments when you can make a lot of money and grow your dividend portfolio with strong companies that don't usually go on sale. Some of the companies I hold won't even be considered to have good dividend yield, but since prices are down, their yield has gone up. So use this opportunity to buy those companies. But remember, always analyze first what you're going to invest in. Don't just buy based on yield. It has to pass your checklist first. Anyway, for the end of the year, my total invested money is 1,578,900, and right now my portfolio's total return sits at 10.22% or 161,288 pesos. This again with most of the stocks I own still at a negative. Most of my returns come from the dividends I reinvested, which emphasizes how important it is to reinvest every penny you get. You know, every time I invest, I always imagine my money as tiny workers. These workers are working for me non-stop for 24 hours, and they multiply every year creating more workers to work for me. So right now while I'm still young, I will create an army of workers so that one day, I wouldn't need to work anymore because the money they earn me is already enough. So comparing my portfolio to the PSE index, it is still down negative 20.20% from my starting point of July 2019. Same with FMETF, an ETF that tracks the PSEI. It is down negative 17.26%. Now I started comparing my portfolio with FMETF since in that fund, they account for dividends reinvested as well. So this would be a much better comparison. Now for December, I bought 2 stocks, namely MPI, MREIT, and a new addition to my portfolio which is FGen. I've talked about FGen before in my stock analysis video. Back then, I wasn't able to buy it since the price is beyond my buy below price. Now I know computing for the intrinsic value isn't an exact science. I'm merely projecting the company's future growth, but it did prevent me from buying stocks when they're price high. Just like FGen, if I didn't have a guide on when to buy it, I would have been buying it back then when it was priced so high. So this is why I love this strategy. Simple and easy to do. Now I like FGen's energy portfolio, natural gas, geothermal, hydro, wind, and solar. They are mostly renewables. They have good financials. Earnings are growing. Though they were affected by the pandemic, they still have a compounded growth rate of 7%. Equity is growing consistently every year with a compounded growth of 8.22%. And they manage their debts well. Their current ratio is 1.71 and debt to equity is only 0.85. For its price valuation, P/E ratio is only 4.7 and price to book is at a very low 0.4, which means I'm buying the company's assets at a huge discount. To top it all off, their dividend yield is 4.72%, which is quite high. It has been a while since I've added to my energy holdings, since most of the companies that I want to invest in have already gone up, and the other energy companies I don't like investing in. Good thing the price went down to my buy below price, which I've now updated. Back then I think my buy below price for FGen was 22, now I've decreased it to 19.01. Next, let's talk about MPI. I bought the company again after its price drop. I was lucky enough to buy it for 3.18 pesos. I like the company's businesses, toll roads, power which is Meralco, water and their other businesses like hospitals, light rail, real estate, etc. Most of their main holding has a strong moat. It is a necessity for people. Although the downside to this company is even though they pay consistently every year, their dividends had been stagnant for quite some time, but it still pays a good amount. Its dividend yield sits at 3.18%. For my buy below price, it's still 4.50. With that, these are all the stocks I own. With the addition of FGen, it's now 2% of my whole portfolio. LTG is still my largest holding, and if its price stayed the same as it is now, I think I would be adding more shares to it. Same for Megaworld, it's still trading at a very low price, though its dividend yield is not that high. With its price right now, it would give you a yield higher than 2%, which is not bad. For Aboitiz, sadly it has gone past my buy below price. Same for DNL, but if these two companies' prices would go down, I'd definitely be buying more of them. For FLI, price is still down and the company gives off a good amount of dividends. I think if the price would stay the same for a while, I'll be adding more shares to it. Grouping my stocks by sector, holding companies take up the largest share, followed up by real estate and banks. With my added investment to FGen, energy has climbed to 9%, and diving into a deeper analysis of my portfolio, the P/E ratio of the entirety of my holdings is only 7.44 compared to the index which is trading at 12.3 times earnings. As for intrinsic value based on free cash flow, my portfolio is still 39.8% undervalued. Other ratios like ROE stand at 14.6% compared to the market of only 9.3%, return on assets 5.9%, and for portfolio debt level, my holdings only have 0.62 debt to equity ratio or 62.98%, which is quite low considering I have a lot of bank holdings. By the way, if you're curious as to where I get all these data, I got it from Simply Wall Street. If you want to try out their portfolio tracker and other tools for long-term investing, then you can use my link to get a 14-day free trial of all their platform's features, and if you do avail their plan using my link, you get a 30% discount. So grab this opportunity now and try Simply Wall Street. So this ends my last update for 2022, and to welcome 2023, I'd still do the same strategy. Invest in great companies that I think are undervalued and which give me a good amount of dividends. And as I was saying earlier, create your army of workers now. It's never too late to start. Start compounding your money so that you will reap the benefits in the future. Financial freedom isn't just a dream, but it isn't an easy thing to get. That's why you need to use the best tools available, and investing is one of those tools you can use to achieve it. So to start 2023, I share this quote again. Someone is sitting in the shade today because someone planted a tree a long time ago. Start the year right, and that is by investing in your future. We can achieve financial freedom, and the time to start is now. This will not only help you, but the future generation as well. Investing is one of the best vehicles to create generational wealth. So let your future self and the next generation sit in the shade because you planted your tree early. With that, I hope you have a good year ahead. I thank you all for supporting the channel, and I hope you continue to do so. Do watch my other videos and share them with those who want to learn investing. And don't forget to click the like button as well. So happy new year to everyone. May we all achieve our financial goals. So thank you and see you in the next video.